Yeah, and it could happen. You see bear market bounces of 10% or more in some days and some weeks, and that could be it. Look, as bearish as I am, I've been expecting a bounce. I'm not participating in it because I really don't think they're tradable. And I defy anybody who says they're tradable to tell me how, because the volatility is so huge. Look at yesterday, look at the day before. So we'll continue to see this, but I'm not going to change my thesis because the market's short-term oversold when I think that the conditions that have caused me to be bearish are still in play. And that's very high inflation, as we saw the day before yesterday. That's going to continue. And by the way, consensus now is that the Fed won't be able to get inflation down below 4.5% for a year or 2 years. So you're looking at persistently high inflation. It's twice what their target is going forward. You're starting to see earnings revisions on the downside. A strong dollar is going to cause that to happen even more with the S&P. So look, as I said before, I'm going to be the last one probably to call the turn because I'm so bearish and I've been so bearish so long.
Does that mean that you're not buying anything in anticipate of a bounce that you say can happen?
No, and in fairness, I just haven't felt compelled, given other stuff that I'm looking at in the private markets, to spend the time doing it. I'm close. I do think you're close to buying selectively some stocks, but not going wholesale in because you've got private equity valuations in terms of EBITDA and cash flow, free cash flow yields in the market that I think are sort of generational. Doesn't mean they won't get cheaper, but I think you can leg into some of those stocks. You got to be very, very selective.
So, Shannon, I mean, the moves that we've seen, I mean, ARK is up 10% today, right? The ARKK, the Innovation Fund, is up 10% as we're having this conversation. From Wednesday's closed, Innovation's up 17%, Robinhood's up 31%, Roku's up 23%, DraftKings 23%, Teladoc 16%, Twilio 19%, Roblox 36%. What are we to make of that? Is that where we think maybe this sizable bounce, if you want to call it that, starts? And then it needs some follow-through from some other important names that we'll talk about in a minute. But how do you assess it right here?
Yeah, I think the latter part of your point, Scott, is the most important piece, is that this is not going to change the trajectory of how most U.S. investors are going to perform over the next couple of weeks. A lot of the retail investors have moved out of these names already. We are seeing, obviously, some significant dip buying here, particularly today in some of these companies. But in terms of what's going to work over the next couple of years, whether or not you believe that we're going to have 4% inflation, we're going to have higher inflation, we're going to have slower growth. And I think that when you're looking at your portfolio, if the follow-through doesn't happen in sectors like industrials, in technology, in healthcare, in the back half of this year, these short-term rallies that we're seeing are not going to be sustainable. So I continue to look at companies that have strong free cash flow, have strong balance sheets, and most importantly, are making money from a profitability standpoint. I think that's when you start to see a shift in the market because those are the companies that are actually going to drive index returns.
Pete, we made a big deal the other day about these puts that you had on, right? Remember that? We did your calls early in the show, and we said Pete's got these puts, and they were specifically, or for the most part, related to ARK. I'm wondering, you know, the ARK Financial Fund, talking FinTech, the Innovation Fund itself. So where are you on those today, given this move that we've had?
Yeah, I'm still in those, Scott. I did trim again. We talked about I trimmed the other day. I trimmed again yesterday. We hit new 52-week lows again yesterday before this big turn that we're seeing at the end of yesterday and into today. So they're going up enough now where one of mine is going to go off completely. What's left of it is going to go off worthless. It was a great trade, though, and that's the ARK F. Now, the ARK K, I actually have a little bit more time out into the future for that one to perform. So I'm still holding on to what I've got there as well, Scott. But yeah, that put buying was absolutely dead on. They absolutely nailed it in terms of short-term looking for these to really pull back in a big way. That's exactly what happened. But like everything else in this market, you've got to be extremely disciplined. We talk about the velocity of these moves all the time, Scott. Give you a great example of that. And if you don't mind, I'd love to hit the VIX real quick. Everybody said, hey, look, we need the volatility index to hit 40 before we can turn. That may be true still, and I'm not saying that we aren't still in that position, but Today, you've got the volatility index back underneath 30, so you're trading at 29. We had 4 times this week, Monday, Tuesday, Wednesday, Thursday, the VXN, which is the volatility index of the NASDAQ, closed above 40 for the first time in a year. Actually, it was November or October of 2020, the last time we were at those levels closing. So we had 4 closes over 40 this week. That gives you a little bit of a sense of, all right, maybe there's a pullback, and maybe that gives the opportunity for these stocks start making a move to the upside on the NASDAQ side. But that was a big jump and a big bunch of closes, Scott.